Hi, my name is Karim Bohn and I'm the CFO of PATRIZIA. For those of you watching us for the first time, PATRIZIA is a leading investment manager for real estate and infrastructure with currently around 46 billion of assets under management. We have a global footprint and provide local expertise to our clients through 24 PATRIZIA offices and 40 boutique operating partners worldwide. Our clients include more than 400 global pension funds and insurance companies, but also private and semi-professional investors. We are active in a long-term structural growth market driven by lower for longer interest rates, increased allocations to real assets, and ongoing industry consolidation. I would like to use this video to present to you our financial results for the first half of 2020. We are using this new format to intensify our investor relations activities and to give you better access and background information to our financial results. I have 3 key messages for you with our first half results. First, we are a stable and reliable partner. Despite the COVID-19 pandemic and the challenging environment, we continue to serve our global clients and close numerous real estate transactions in the market. Second, we are profitable. We have a rock-solid balance sheet and ample liquidity for further growth. And third, we continue to grow, driven by client demand. Our global clients entrusted us with 600 million new equity in the first half of 2020 to invest on their behalf. And our assets under management increased further to around 46 billion euros. So, how have we performed financially in the first half of 2020? Let's start with the revenue side. First, management fees came in slightly below last year's level at 96.1 million euros. We, however, have to bear in mind that last year included some one-off effects of 3.9 million. So, on a like-for-like basis, we actually talk about 3.1% organic growth in management fees in 2020 so far. Second, despite the challenging market environment due to the COVID-19 pandemic, we recorded a strong increase in transaction fees in the first half of 2020, up 67% year on year. This was driven by selected transactions we carried out for our clients. Third, performance fees. The superior investment performance we realize for our clients drives this number. It is down around 16% compared to a very strong level last year, but still a stable contributor to overall revenues. And we expect to generate further performance fees in the second half of 2020. If you add all 3 revenue lines together, you will see that our total service fee income is hardly unchanged compared to last year, despite significant market turbulence and economic uncertainty. This confirms the resilience of our business model. Net sales revenues and co-investment income was up significantly to last year, mainly driven by income from one of our co-investments. Our phase-out principal investments hardly played a role, and this is fully in line with our strategy. Let's move to the cost side. Net operating expenses were up year on year as we continue to invest in people, technology, and further improvement of our client experience. More importantly, the total cost ratio, which compares our cost base to our assets under management, improved further from 53 bps to 46 bps in the first half of 2020. This confirms the scalability of our business model. If we add all this together and take into account D&A and our finance result, we come to our main KPI, the operating income, which came in at 74.1 million euros in the first half of 2020. This is slightly down compared to last year's first half, when we generated 79 million euros. But don't forget, last year was supported by some one-off management fees and significantly higher revenues from the sale of principal investments. As you know, we are close to having fully phased out own balance sheet investments to be a 100% independent investment manager, fully in line with our strategy. Last but not least, let me comment on our outlook for the full year. We can confirm our guidance range for operating income of 100 to 140 million euros. Our results for the first half 2020 at around 74 million euros gives us good tailwinds to well reach our guidance range for this year. Whether we will reach the upper or the lower ends of the range really depends on the further development of the COVID-19 pandemic during the remainder of the year. Do not forget that transaction activity not only drives our transaction fees, but partially our realized performance fees. Should there be another European lockdown with significant negative impact on real estate transaction activity in the fourth quarter, we still believe to generate more than 100 million euros in an extraordinary, special and tough year for all of us. So, let me recap. First, we have a resilient business model that benefits our clients and our shareholders. Second, we performed well in a very challenging market environment. Third, as a stable and reliable partner, we will continue to be an active player in the structural growth market for real assets investment management with continued organic and inorganic growth. Thank you so much for your attention. We would love to hear your feedback on this video format and to continue the dialogue with you. So please feel free to drop our IR team a line or two if you like. Stay healthy and keep in touch. Thank you and see you next time.